Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Mike Baudendistel back with us with a Rail Intermodal update, but first we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey there, and welcome to your Tuesday Carrier Update presented by PowerFleet. I'm Zach Strickland. So the market is starting to turn up a little bit here. Now, we thought that the market would even out this week, kind of have this early June flat period. Well, we've seen volumes and tender rejections both pop up their heads here a little bit over the last day or so. We're jumping all the way up to 5.58%. May not feel like a lot in terms of general value, but it is one of the bigger jumps that we've seen over the last couple of weeks or so. So we were at 5.36 yesterday, all the way up to 5.58 today. So again, significant move, relative to what it's been doing. So maybe this is the start of a trend, maybe not, we'll see. But at the same time, this is still a very, very low tender rejection rate. Do not rush out to the spot market and think that you're going to start making a lot of money on the spot. But volumes also, jumping up here a little bit, a pretty significant move. Not the most significant move that we've seen over the last couple of weeks, however, because we did have this really unprecedented rise as the market recovered with freight volumes. So again, volumes and rejections both on their way up right now. We do anticipate volumes to continue their rise. It could not simply keep going up without having some sort of impact to capacity. However, so this is not necessarily out of the ordinary, out of the expected. Tender rejection rates could probably keep creeping up, especially if volumes stay at this level. So where in the market can we anticipate some of these volumes to have a significant impact? We're looking at our market volatility map right here. The strongest increases in our tender rejection rate are in this column right here. So Cape Girardeau, Missouri up here, Las Vegas, Nevada, Memphis, Tennessee. Now, I have the weather pulled up on this map here, just showing you where, tropical storm or now tropical depression Cristobal has kind of run over this area, potentially having an impact to capacity. It didn't look that way so much yesterday, but looking at the rejection map today, this is the most significant change week over week in tender rejection rates that we have pulled up. So anything in the green has strong to moderate increases. Anything in red has decreasing tender rejection rates. Pay attention to that red value down there in Lakeland, Florida. Lakeland, Florida, of course, right in the middle of its produce season arena, and a lot of food and beverage has been coming out of that area. So again, tender rejection rates are going way down in Lakeland, Florida. Pay attention to that for any carrier operating down there. But right here in the middle of the country, you can see this swath. It's almost following the path of Cristobal here as it continues to drop a bunch of water. Flooding rains over the Mississippi area, but not necessarily, it's going to combine up here, maybe create some disruption up there in Iowa here over the next day or two. But again, middle part of the country, and then out here in Vegas, having some disruption on the tender rejection side. Breaking down the Memphis market, you can see volumes and tender rejection rates both popping up here, significantly since the start of June. We talked about this a little bit yesterday. That continues today. We thought it was flattening out a little bit, but here over the last day or so, tender rejection rates bumping all the way back up over 9%. So again, pay attention to this Memphis market. It's still having a lot of volume and disruption and in terms of capacity. So Memphis continues to be pretty strong. Head haul values, again, relatively strong at 47, meaning that there's going to be a lot more freight coming out of this market than going in right now still. Out west, however, the Las Vegas market. So they opened back up in Las Vegas, and now tender rejection rates and volumes have both followed. So 17.74% tender rejection rate out of Las Vegas right now, well above the market average of 5.58%. So volumes, again, spiking out of Las Vegas. Rejection rates really jumping out of Las Vegas right now. Traditionally, Vegas is a consumption-oriented market, illustrated up there in that head haul volatility at a negative 17.23. It continues to be pretty soft in that regard, but we did have a 4% increase in head haul volatility over the last little bit. So anybody operating out in Vegas, especially on the mid-haul freight that's moving between 250 and 450 miles, pay attention to Vegas today. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning everyone. I'm Luke Falasca bringing you another broker update. And we're starting to see volume levels continue to push back up, which was a little surprising. We were expecting them to be flat most of the rest of June, but we'll see if this does continue. Right now, what we've done, just to give a little bit of comparison, you have in blue is volume levels for this year compared with volume levels of 2018 and 2019. You'll see in orange, that is going to be the volume levels for 2019, and then in green here, you've got volume levels from 2018, and then obviously 2020 here in blue. So if you notice, after this Memorial Day dip here, which all 3 years experienced, you shoot up quite a bit. Now, obviously, we're a little bit higher now than we were the last couple of years, and then you sort of go into this holding pattern where you remain fairly flat. However, we're starting to tick back up again. We'll see if that does continue, but if it does, you'll probably start to see rates and tender rejections continue to push up, which we're beginning to see, in fact. Right here on this next chart, let's look at the tender rejections. Overall in blue, what you have here is the overall tender rejection rates. These are going to very closely correlate with the dry van rates. So we're sitting just over 5.58%. So we're eclipsed that 5.5% mark, and if things continue, you may start to see, we may clip that 6% mark before the week is over, and that's going to continue to drive spot market rates up. Now, if you notice that purple line way above the blue line, those are the reefer tender rejection rates sitting right at 11%. Those are continuing to push higher, especially as produce season gets deeper and deeper, and that's going to keep pushing those rates higher and higher, and potentially put downward pressure on capacity. Let's go ahead and look at our money map here. So what we've done is we're looking at the weekly change in tender rejection for all these markets. So the markets in blue are going to have your greatest increase in tender rejections. The markets in red are going to have your greatest decrease in tender rejections. And then the white markets are going to have a slight uptick over the last 7 days. And if you notice here, kind of in the middle of the southeast, right, kind of surrounding Memphis, Arkansas, Mississippi, even some of the northern parts of Memphis, very deep blue there, seeing a lot of upward pressure. You're talking 5, 10, 15% increases in tender rejections over the last 7 days. So we're going to take a look at that again in a little bit. Also, the state of Nevada here, especially the Vegas area, seeing a little bit of pressure. And then you just kind of have some mild increases here around Arizona a little bit, and kind of the Pacific Northwest. But outside of that, some mild red here, especially in the middle of the country in Texas, and a little bit over there in the eastern part of the United States. So as we continue to look at some of these markets, those areas here, the red areas are going to be where there's going to be downward pressure on pricing, and it's actually going to be easing capacity. Shippers will have an easier time covering freight in those markets. So as a broker, what you need to do, focus on these blue markets. That's where you should be calling to get more freight. That is the areas where shippers are having a more difficult time covering their freight compared with those red markets. So be a hero, call the blue markets there. You should find some good opportunities today as well over the next couple of days if this continues, and you should have a pretty good return for this week. Now, we're going to look at the Memphis market here because remember, we were just looking at that and we saw in the middle of the southeast there, right around Memphis and some of those surrounding areas, a lot of upward pressure. So looking at blue here, we've seen this big increase, a massive jump right at the beginning of June out of Memphis, and that right there are those tender rejection rates. We went from just under 4%, not 7 days ago, to now we're sitting at over 9%. And that right there is going to put a lot of upward pressure on pricing, especially spot market pricings out of Memphis. So if you're moving rate loads there today compared with, say, a couple of days ago, you should really think about increasing your rates. You should have the luxury to do that. Plus, carriers will start to ask for that premium. And especially since we're sitting about 90% above the national average there. Also, this green line there, that's that volume level, massive surge here over the last couple of days. We started to see that surge just a few days before the rejection rates, and that's likely what's driving it. And that'll do it for today's broker update.
Welcome to your Rail Intermodal update. I'm here with Mike Baudendistel. Mike, what's the latest?
So one thing I'm finding interesting in SONAR right now is we have this one data series called intermodal spread. So intermodal spread is basically we're taking the cost to ship a container from China through the Panama Canal to the U.S. East Coast, taking that on a rail to Chicago. So that's option A. We're subtracting the cost to move a container from China to LA and then taking that to Chicago. You can call that the land bridge. So sort of an East Coast versus West Coast. And one thing that's been interesting is we've seen some changes here lately, closer to you. If zero would be sort of a neutral, and when both of those things are considered, here, if it's less than zero, it would show that the West Coast is more expensive, and the latest reading is negative $372. So it's showing that it's about $372 more expensive to ship a container through the West Coast versus the East Coast. Would normally expect it to be negative. Thought it was kind of a little bit unusual that it was in the positive, but really it's typically a consideration of cost versus speed. You can get product to market faster going through the West Coast, going through East Coast. It's about a two-week extra sailing time. Usually saves money because on a per mile basis, it's cheaper to move it through the water. If we go to the next slide, I'm going to show you what the biggest driver of this is, and I'm going to call this the ocean spread. So the spread between moving a container from China to the West Coast versus China to the East Coast. If we go back here in beginning of 2020, it was up in the $1,300 to $1,400 range to that extra two-week sailing time to the East Coast. Closer to you, it's down at $713. So it's basically been close to cut in half, and so I thought that was kind of interesting. I mean, a lot of that has to do with changes, where the canceled sailings are. A lot of those have been in that Pacific route to LA, and also I think a desire to get goods to stores and distribution centers quickly as the economy starts to reopen. Some big cities reopening, New York this week, et cetera. And we're starting to see this also in rail volumes. In blue, I have outbound rail container volume out of LA. You see closer to you, that's been rising a little bit. These are on much different scales, but in green have outbound containerized rail volumes from Savannah. You see that off its high. So it does seem like the market is pushing a lot of freight through California quickly to the distribution centers and to stores to get them reopened, and we're seeing that in the data.
Got it. And Mike, you mentioned reopening really driving a lot of this right now. This might be a shot in the dark, but how long do you think this would last? Is this something that's sustainable, or just maybe a blip or a trend for just a couple of months?
I think that the intermodal volume is getting gradually better. I mean, it sort of went from being down 20+% year over year to being down more like 10. So now we're starting to get into sort of down high single digits. So it does seem to be sort of gradually improving as things start to normalize. So I don't know if it's necessarily a blip. I think it's sort of more things go open, it might get closer to last year's levels.
Excellent, Mike. Thank you so much. We appreciate it. Insightful as always. And thank you so much for tuning in. That's going to do it for this Rail Intermodal update, and that's also going to do it for this edition of FreightWaves Now. But the content doesn't stop here. You can check out all of our latest on our FreightWaves TV app on all your favorite streaming platforms. Be sure to tune in. Thank you so much for watching, and we'll see you on the next episode.